she loves me. Isn't it lovely when the one you lusting is the one you're loving?
I was just talking to my students today about getting venture capital to start a magazine in the 90s, and how the lesson that I learned from that was to build on my own. never be beholden to anyone who's giving you money, because those dollars come with strings. What advice would you give to people? Because there seems to be a culture of getting the next round of funding, getting the next round and the next round and the next round, is and not focusing on running a business for the next 100 years. Keeping a business, like I don't see, the Walmarts starting today, because everyone's going to sell out to the next round of funding and then be reduced to nothing and not have any control over their idea. What are your thoughts on that?
I agree with you. I mean, my job is as a capital allocator, a venture capitalist, but the vast majority of businesses that I talk to, I think should be starting and growing without venture. There is a very small set of businesses that it makes sense for them to get infusion of capital from this asset class that I'm a part of, venture capital. The vast majority of businesses really need to be focused on getting growth capital from their customers, selling more, figuring out their price and cost models so that the math makes sense, so that they're making more money than they're spending and growing that way more organically. And so I think that venture capital has had really incredible marketing over the last decade or so, probably decade plus. I would say The Social Network, the movie about Facebook, was probably the start of people thinking that they had to get venture capital to grow and scale their businesses. But in reality, most businesses and most founders don't really want what comes with bringing on an investor. Most people get into entrepreneurship because they want to be in control. And you give up control when you bring new capital into your business from a standpoint of venture investment. So the other thing is there's a lot of capital out there in different forms. There's non-dilutive capital. If you're doing a research intensive business, there's research grants from the government. If you're doing something where you can get grant capital. So there's a lot of things out there that maybe don't have as good of marketing as venture. But I always like to tell people to think about where you want to be in 10 years with your business. And if you see yourself as the owner still, then venture capital may not be the right type of capital for you.
I was in the midst of starting a business. I reached out to Kimberly Bryant. She has, she's amazing. And she said, you don't want venture capital. Trust me. You don't want me to invest in this. It's a brilliant idea. Trust me, you do not want me to invest in it. And yep. I was, she walked me through it, and I was like, she's absolutely correct. I feel like for some people, though, it seems like a get rich quick scheme to get that round of funding, 10 million, 20 million. I sold my business for 50 million. It seems like the retirement plan that we all wish for. So I think some people may start businesses just to try to sell them.
Yeah, and I would say that's probably not a winning strategy. Just to give some more background on myself, I built a business and sold it to Amazon in 2016. And so have had that experience of building something from nothing and going.
Okay, wait, pause, Jewel. Let's break this down. Jewel Burks Solomon is here. What was the business? How did you start it? And then how did you engage with it? Walk us through that. Give us the anatomy.
Yeah, so I started a business called Partpic. I started it in 2012. It came out of me identifying a problem in the job that I was working at the time. I was working at a parts distribution company called McMaster Car, which most people haven't heard of. A better known competitor is Grainger or Fastenal, but they sell industrial parts. And I was managing the call center there. And I got all the angry phone calls from customers who we had sent the wrong products out to. And I got tired of that. And I wanted to figure out what's a better way for customers to find and purchase the products that they want to buy in this industry, in the parts industry. And prior to that, I had started my career at Google. So I knew that technology could be used to solve, technically challenging problems. And so, took my time at that job to really do customer research and discovery to find out what were the real pain points in this industry and how were they not solving for customers' problems. And that industry was pretty archaic when it came to technology. And so it was a novel idea for me to apply a visual search, really AI technology 10 years ago into this industry. And so was able to stand up an incredible technical team led by Dr. Nashley Cephas, who's another Black woman out of Atlanta. She was getting her
Okay,
PhD.
wait, you are skipping over some things. All right, so you saw the problem.
Yeah.
You sat down and determined here's the solution. And then you found the team of, did you reach into your Howard bag? Like, how did you find your team?
Yeah, I mean, I always reach into my Howard bag. The network is incredible always, but I actually reached into my, proximity bag, and I was living around the corner from Georgia Tech at the time. I knew that, having done some research, I knew that I needed machine learning engineers to help me. I was not an engineer myself. I had gotten close to engineering as a field during my time at Google, so I knew kind of what to look for, but I knew that I couldn't build the algorithms on my own. So I started hanging out at Georgia Tech. I was 23 years old at the time, so I still, could fit in on the college campus. So I just started going to events, talking to professors, getting to know people, and talking about what I had a plan to build or needed to build, and was able to, through one introduction to another, find people who had the skill set, and then, went through some hard knocks as far as building the team, but ultimately landed on, the person who really was the brains behind the operation, Dr. Nashley Cephas. We just vibed from the first time that we met. And she also had the talent and the brilliance to kind of help me build out my vision. Started working together with her, and we kind of built a whole team. We were 15 people by the time we sold the business. And
Okay.
And it kind of built this.
Slow down, Jewel, because and I feel like, these stories, we may read about them, but to actually be in community with somebody that has walked through the paces, I want us to sit with it, because there's a story arc, but there's also a blueprint that can be followed, whether you get venture money or not. So you built the thing. What did it look like? Did the prototype look like what it ended up becoming?
Absolutely not. The prototype was rough. I remember, what we were doing was we built a technology that allowed you to take a picture of a part that you were looking to identify, and we could tell you what that part was and where to buy it. And we could give you the specs on the part based just on the image. And so the first prototype was, the first thing that I was really excited about was being able to sit about 10 parts on a table. So when I say parts, I'm talking about nails, bolts, screws, that type of thing, fasteners. And sitting a few parts on the table that we kind of hard coded into the app, could take a picture of those parts and we could return the correct answer. So that was the first version, where we could give people a little bit of the magical experience of being able to take a picture and get a response. But in the back end, the database was a little bit rigged. So that was the first version. And by the time we sold to Amazon, we had 1 million parts in the database and had very high recall and precision related to how the technology operated. And so, super proud of what we were able to build with a small and scrappy team in Atlanta.
How long from not perfection, but, having something that was viable, to making the pitch? And what was that pitch to Amazon? How did you end up getting to Amazon?
Yeah, so we were 4 years in business. So pretty quick, I would say, as you think about, how long the arc of businesses could go. But we started I came up with the idea in 2012 and sold the business in 2016. And we didn't pitch Amazon. Actually, part of my vision of growth was to center Dr. Nashley as the technical leader and get her on stages. And so I reached out to a deep learning conference in Boston to have them invite her to come to speak, because I saw that they didn't have any women speakers. They certainly didn't have any Black women speakers. So I really was trying to raise her profile, because I wanted people to take Partpic seriously as a leading edge technical company. And so in doing so, in order to do that, I needed to make sure that people knew her. And so, I asked them to invite her to speak. They did. She did a session about how we determine the threads per inch in a screw, very technical session, and Amazon corporate development. The people that, purchase and do mergers and everything at Amazon were in the room during her presentation and just fell in love with the technology, reached out, and that's what got the ball rolling on us getting acquired.
Okay. Now, did you struggle with giving up your baby? Jewel Burks Solomon is here. She is, are you the president or the founder of Collab Capital?
I'm the founder and managing partner.
Okay. All right.
Yeah.
Was it a difficult decision? Because I've often said, we've talked about companies selling out, in the hair care space, whether it's Shea Moisture or Carol's Daughter, and I'm like, if they give you 20 million, they can make 10 times that, and they're also buying us. They're buying us. Like, I feel like in many ways, Elon Musk bought Black Twitter, because we were the ones that made $44 billion. That's what we're worth, but we didn't see a single dime.
Yeah, exactly.
I know. I'm saying in that space, but for this, they came to you. Did you have a number? Because you always tell people you have to have an exit strategy with tech companies in particular, right? You have to know what your number is. Did you guys already decide what it was that you were going to sell for if they came?
So I'll tell you this. I always knew that I would sell the business because I knew, just watching this space, that we weren't the type of company that would likely get big enough to IPO. And I knew that there was a requirement for an exit because I did have investors. I raised about $2 million. So I knew that I would sell. I did not expect to sell at the time that I did. I had on my kind of goal board, I was expecting we would be in business for probably closer to 7 years. I had a goal of hitting a certain personal financial target before the age of 30. And so I started at 23. I figured I'd sell by 30 and then I'd hit my goal. So it was earlier than I anticipated. It was also not, when you say, was it a difficult decision? It was an extremely difficult decision because I knew how big the business could be from a standpoint of where we were with customers, where the technology was going, and ultimately where our roadmap was leading us, and kind of just how we were progressing. I knew that we had a lot further to go. However, I was faced with the reality of the funding landscape at that time, and this is 2015, 2016, the funding landscape for folks who look like me, Black women in technology. And I recognized that it was going to be an uphill battle for me to continue to raise funding, which I needed to do because we were that type of high scale, high growth company. We had very expensive engineering talent. We had, at that time, expensive computing costs. And so I needed to raise more money, and I was having a hard time doing that. And so the decision point that I had was, do I sell where the amount of money that I'm going to make, what I'm going to be able to return to my investors, where the company is going to go from a scale of the technology perspective in Amazon's hands versus in my hands alone? I could see that it was kind of checking the boxes on all the things that I needed to happen versus raising more money with investors who were likely to push me out, who didn't really value me as a founder and a team, who always were questioning, did you all really build this? Is there some, secret person in the background? There was a lot of that.
Serious?
I'm so serious. Yes. A lot of doubt cast. And so I made the decision, which was a hard decision, to go ahead and sell the business with the understanding that when I had the full view going from idea all the way through acquisition and further to integrations, I spent 3 years at Amazon integrating the technology into the Amazon mobile app and launching other visual search products. I knew that that journey would empower me to be able to help other people do the same thing thousands of times over. And so that's what I've been doing since selling the business is, getting capital out there and being a part of other people's journeys and hopefully helping to make sure that they don't have the same roadblocks that I had when I was building.
The capital that you got from the sale, is that what you used as the foundation for Collab Capital?
Yes. So I initially,
So you put it back in to to seed more things.
yes, yes.
I love
I
that.
initially started angel investing. So um that was my entry point into investing. And basically what I did was when I sold the business, honestly, like I said, it was a really hard decision. And I was in a bit of a depression around it because I felt like there was so much more we could have done, so much more to go. And I was sad that I didn't get to my ultimate goal, which I was, I had this vision of $1 billion outcome, $1 billion business. And so even though it was a great outcome, I was, checked a lot of boxes. I still was disappointed that, I wasn't able to get to my ultimate goal. And so in order to work myself out of that depression, I started to meet with founders. I kind of put it out there. I'm meeting with founders for breakfast. If you're building something, let me know. And I would love to talk to you about what you're building. And that was my way of getting out of my head and being productive and helpful. And also just learning about, I've been pretty heads down on the computer vision and industrial parts space, which is very specific for a long time. And so wanted to learn about what are people building in other industries. And then I started, having these breakfast conversations, meeting incredible founders and getting really excited about what they were building. And so started writing checks. I had made myself a budget of what I could invest in other people's businesses. I wrote 15 angel checks in a pretty short period of time. And then I realized, okay, I'm about to hit up against my budget and I want to do more of this. So started to think about what would it look like to build a fund where I was not just deploying my own capital, but pulling capital from other investors and deploying on their behalf.
So how does that work? We've been talking about investment spaces for a while. Welcome to Nubia, by the way.
Yes.
I see you in there, and you did what I've been asking people to do. You got your name. Add Jewel. Come on through. I was like,
yes, so
Jewel,
excited. I'm like, I'm
name. Like,
here.
When do you get to be the first on a thing where you could be your own name? I'm at Karen. Hey, yes. But we think about people who invest, like Nas invested in Ring, early, and I was like, oh wow, it's like, oh, Nas is a rapper and he's got money. But it doesn't take a whole lot. It's collective, right? So we come together. So I'm always thinking about, I remember being inspired by a person who came on and said, if 10 of your friends got together and you all pooled your resources to get a franchise in your community, what would that look like? And and it started me thinking about how we collectively can move. So when you write your checks, now that you have this fund, what are you looking for? Number one, and are you looking for other people to join the fund?
Absolutely. So I'll just give you a little bit of a background on Collab. So as I mentioned, Collab Capital is an early stage venture capital fund investing exclusively in Black-led technology companies. We have made 34 investments out of Fund 1 since we started deploying in 2020. We've invested in companies across the US. Right now, we're focused on US-based companies. We also are focused on companies, we like to say, companies that are solving consequential problems. So our perspective is there's a lot of technology out there doing a lot of different things, and that's all great. But for the time and space that we have and the resources that we have, we want to be really targeted to companies that are solving real problems. And the reality is, in our communities in particular, there's a lot of problems to solve. And we have unique perspectives and experiences that inform unique solutions. And so that's kind of our focus at Collab. We typically invest between $500 to $1 million in a first check with a potential to follow on. So write another check up to $2 million. And we're super excited about the companies that we've invested in. They're representing the best and brightest that we have to offer, we think, in our community. So it's been a joy and also a lot of hard work to not just find those companies, but also wrap them around, with our experience and our network. And so when you talk about the collective, that's really important to us. I mean, we named ourselves Collab Capital for a reason. We want to collaborate with our community to make sure that we're not only solving the problem of access to capital, but there's also a huge problem of access to networks and access to the right relationships in order for companies to grow and scale. That's a big part of it. And so we think about how do we tear down some of those obstacles and those walls that exist and allow companies to reach the markets, reach the advisors, reach the customers that they need to reach in order to grow.
We're talking with Jewel Burks Solomon, our CEO, Justin Dawkins, long time no see, bruh, among your team. For you at Collab Capital, the investment. So if someone say I wanted to come in, let me not use a hypothetical person. Say I wanted to be a part of Collab Capital. Mm-hmm. What do I need to be an institutional investor? Or is there a certain dollar amount that a person has to come in? And who gets to determine, like, if I want to invest in one specific thing and not all of the funds or all of the different businesses, can I target a particular business? And if so, what's my return? How do I get my money back?
Yes. So I'm going to talk about this in a little bit broader context so people
much broader. Yes.
So for funds, typically you do have to be an accredited investor. And the breakdown of that quickly is that you have either $1 million net worth, or you have made $200,000 as an individual or $300,000 as a couple over the last 2 years. So that's the high level criteria for becoming an accredited investor. And then recently it was also added that if you have passed, I believe it's Series 7 qualification, then you also can be an accredited investor. So that is typically a requirement for most funds. Some funds do allow for, a segment to not be accredited. There's some different ways, like, there's crowdfunding into funds. There is different designations where 100% of the investors don't have to be accredited. But by and large, most funds are looking for accredited investors. In our case, in our first fund, we had 97 limited partners. So that was a range of institutions, corporations, individuals. We actually focused on having individuals for a few reasons. One, because we wanted to have Black folks in the fund. Our initial goal was to have 100% Black LPs, 100% Black companies. And we quickly realized that it's pretty hard to raise we raised $51 million for Fund 1, and it was pretty challenging to raise that all from Black people. Not impossible, but challenging for the first time. And so we ended up raising a big portion of the fund from corporations and foundations. In Fund 2, we're targeting $100 million. So because of that, our entry point is higher, just because the SEC has rules as far as how many investors you can have in a fund. And we were kind of almost up against that cap, which is 100 investors in Fund 1. And so in Fund 2, the entry point is $1 million, so that we're not hitting that 100 investor cap. So that's kind of high level.
Yeah. All right. So the hypothetical person gives $1 million because they're an accredited investor. They put $1 million into the fund. When can they expect to get a return on investment? And how does that work? Is it a percentage every month? Is it, you get a return every month off of all of the funds, all of the businesses that you've invested in? Or is it an annual? I don't know. I've never done this before. Jewel.
Yeah. So the typical fund, I'm saying typical because different funds have different flavors. But typical venture capital fund, you're looking at a 7 to 10 year horizon for returns. And so think about the fact that when you invest, and particularly funds that are investing at the early stage like us, when we invest, we're underwriting for a company that is probably sub $1 million in annual revenue. We do our planning based on what does it take to get this company to $100 million in annual revenue? And then what does it take to exit this company, or at least exit our position within 7 to 10 years? That's for every company that we invest in. We have to believe that the business model, the market that they're in, is big enough for them to get to that level of scale. So with that in mind, you have to think that if we're doing that math for every company that we're investing in, the expectation is that they need time in order to get there. And so the investors that we have understand that it's going to take, again, 7 to 10 years, somewhere in that time horizon, in order for them to get what we're promising or, expecting, which is somewhere in the range of 3 to 4x the dollars that they put in. And so that's kind of, again, high level, how fund math works. I would say that of asset classes and places to put dollars, and I'm saying this because I tell everybody this that's thinking about getting into venture investing, it's a very risky place to put capital. So you have to know that going in. And I think it's risky. It's a risky place to put capital, but I would say it's probably less risky than investing in an individual company, because you get to spread your risk across, in our case, we have a portfolio of 34 companies. And really for us to make that 3 to 4x return, only 3 to 4 of those companies have to hit that mark that we're talking about of 100 million with an exit. And so that, I think, if you can wrap your head around just portfolio management and thinking about how you can get, access and a viewpoint for getting into lots of different companies, that kind of allows you to do that without having to be the one to pick them and do the operational management and, the additional support and things that we offer to our portfolio companies.
For those of us who invest in stocks, it's like investing in an EFT or ETF, so it's a specialized ETF with Black people at the center, which is how I would look at it. I like it. I like it. I'm looking at our time. I'm thinking, we should probably have you back to talk about the different kinds of companies that people should invest, that you are looking to invest in. So that, because again, we started off, not everyone should be getting VC. Most people probably shouldn't get VC funding. You've primarily focused on what, tech companies?
Primarily tech companies. We have a few outliers in our fund, but vast majority of the companies that we invest in are tech focused.
Because those are the easiest to get the 10x return and get up, because tech is constantly moving. Exactly. But for a restaurant, with a special recipe, something like that, it probably wouldn't be hitting the Collab Capital Fund.
It would not be hitting the Collab Capital Fund, but one of the things that we're also focused on is routing and helping people figure out what's the right type of capital for their business. And so we built partnerships with debt providers. And I think a lot about what does the capital stack look like for Black-owned business more broadly, because like I said, it's only a very small percentage of businesses that will ever get to the kind of venture capital level. But when we think about jobs in our communities, when we think about economic impact in our communities, the mom and pop shops and, the restaurants and things do have high impact. At the volume that they have is very impactful. So we need to make sure that those companies get capitalized as well. Collab Capital in its current form is not the right capital partner for those folks, but making sure that they are able to find the capital that they need is part of our mission as well.
So next time, not that we're going to do pitches, but I would like people to call up to, with their ideas, because everybody's so worried about somebody stealing their ideas. But I'd like to talk about the kinds of companies that you are investing in and maybe highlight one or two. Let's do that. Also, research grants and grant capital, this non-dilutive area. I want to talk about that with you as well. So maybe that's another segment at another time. But, usually initially, I never know how radio friendly people are going to be, even if they've been on radio before, because as certain people figured out, this may not be an ordinary radio show. You might get asked questions that you're not used to being asked. And I don't know why, because I think they're basic questions. But you are a jewel, literally. So I'm going to invite you back if you will come.
Absolutely. I would love to come back. There's so many things that I want our community to know. And I'm a fan. So I'm excited to continue the conversation.
All right. And I will see you in the Nubian streets as well. And y'all can follow her also at Jewel. You can go to jewelburks.com and Jewel Melanie on the Twitters. But, in Nubian, you know how to find her at Jewel.
I run my fingers through her hair as she smiles and says that she loves me. Isn't it lovely when the one you're lusting is the one?